Welcome to our on-demand webinar, You've Got Home Equity, Reasons to Use It. My name is Melanie Reyes, and I will be your host for this session, and I'm the Financial Wellness Specialist here at Summit Credit Union. Before we get started, I would like to share just a little bit about Summit Credit Union and why we choose to prioritize financial education. And that is because at Summit, we believe that no matter where you're at in life, making smart choices really is the key to being financially successful. And that starts with the right tools, the knowledge, and the resources. And we do believe that financial success happens together. I'm thrilled that you're here with me to learn more about leveraging your home equity. And wherever you are in your money journey, there are things that we can all do better, from our spending habits to how much we can save, to how fast we can pay off debt. Being able to use equity in your home so you can borrow for the things that you want to do is a cost-effective way to borrow. For several years now, home values have been increasing. You might have value in your home and be quite surprised at what you can do with the equity you've built up. Here is what you are going to learn in this session. Money terms you need to know. What is a home equity loan and a home equity line of credit? Top reasons for using your home's equity. How to determine your home equity. How to access a home equity line of credit or a home equity loan, and how to apply. Now let's discuss a few terms that are common when it comes to talking about borrowing and using your home as collateral. At Summit, when you stop in to talk to us about a home equity loan or a line of credit, we may use some money terms that you might not be familiar with. No worries. I'm going to tell you about them now so you feel more knowledgeable when you talk with us. Loan to value, or related to as LTV, this is the total amount owed divided by the value of the home. The loan to value helps you determine the interest rate that you will repay. Equity. This is the difference between the value of the property and the loans currently owed on. At Summit, equity can be in vehicles, homes, and other secured loans. A person may choose to use equity in a home or a car, which is the collateral, so that they can take advantage of a lower interest rate. Variable rate. This is an interest rate that can be adjusted based off of the prime rate. Fixed rate, this is an interest rate that does not change and is guaranteed for the life of the loan. Collateral. Now, this is something that you are using that is registered. For example, the home, a car, a boat, etc. Now, let's talk about options when taking out equity from your home. There are multiple loan options available that allow you to use your home as collateral. You could look at a refinance of your first mortgage to have one loan, or you could look at a second loan that is often called a second mortgage. Here at Summit, we have two options. Number one is a home equity line of credit. Now, this is our most popular option. This rate is a variable, which means that it can it can adjust with prime. We do have a floor rate that would be a minimum as well as a maximum. Now, the fees can be low to no cost, plus the rate is super competitive along with providing flexibility. There may be a tax deductible option at year end, and we advise that you consult your tax advisor to learn more. There is no annual fee or prepayment penalty, which is my favorite. Many members have used the line of credit for short-term needs to pay off other items or have had it sit there until it has been needed. You have easy access to funds with online banking and can transfer any time of day right from your smartphone or your computer. You can lock your balance in a low fixed rate term up to 15 years if you need that peace of mind that the rate will not adjust. Also, when you pay your balance down, the money becomes available for you to use again without having to request a brand new loan. Number two is a home equity loan. Now, the home equity loan is a great option for those who may not be fully rate driven, but would like that peace of mind with a locked rate and a payment. The rate on a home equity loan will be slightly higher, but most often it is still less than any personal loan or credit card you may be obligated to. Just like a home equity line of credit, the home equity loan may be tax deductible. There is no annual fee or prepayment penalty either. There are closing costs associated with this option, which are pretty much low in comparison to other institutions we've seen. With the home equity, once it is paid off, you will need to reapply for another loan if you need additional funds. Now, we do have a link on our website where you can compare rates, terms, and products if you type in home equity right in the search bar. Now, one of the first steps in the process is determining your home value. We have multiple options that we look at. The first route is called an automated value method, and that can be referred to as an AVM. This route is automated and it will generate a value from a system we use. To determine the value, the system looks at recent sales and comparables in the area. 90% of the time, we can pull a value using this method without having to have a more expensive method completed. The second option is a drive-by value, and some people call that a drive-by appraisal. This is where we send out an appraiser to drive by the home to do an estimated value. They often do take photos as well. A no hit means that we were unable to perform the automated value and need to use another method. The lender assisting with the application would inform you of the next option. And the other option too is the full appraisal. And many of you may have heard of this when obtaining any mortgage refinance. And this is our last resort due to cost. We have had members that request this right away who have done extensive upgrades and would like to know their full value. So how does Summit determine the value of your house for a loan? When we determine which method is being used for determining the value and have the value back or we've received it, we then take into consideration the amount minus the loans that you currently have outstanding. The amount that is remaining is the equity in your home. As you can see in this example, the home value is $200,000. The amount owed on loans is $160,000, which means the equity is $40,000. From there, we take into consideration the loan to value that you borrow. For example, 90% in this example would equate to $20,000 in a home equity loan. Now, loan to value helps determine the interest rate that you would be borrowing on. Depending on the amount you borrow, the rate is determined by that loan to value. For example, 80% of the home value will be a lower interest rate versus borrowing at 100%. I did add a disclosure to the bottom as I've talked with members who have forgotten that they may have grants on their home. Grants are taken into consideration for the total amount of equity that is available. And I have seen from working with members that sometimes a grant may be out there for 3 years, it could be 5, it could be 10. So it's always good to be able to know when that will expire. This is a good disclosure to share when talking to a lender as well about the amounts you're looking to borrow. So they have a good idea of what will be coming back when the paperwork is returned for that valuation, and also understanding, if there are any judgments out there in addition. You could be approved based on one amount, but without knowing that disclosure and until that paperwork is returned, that amount may need to be adjusted. Top reasons for using your home's equity here. So let's talk about that. Most people use it for home remodeling, consolidation of existing loans, to pay bills, funding life events, or paying for unexpected home and medical expenses. But you can honestly use it for anything. And there is no documentation that is required on the credit union side for how you use it. Now let's talk about how you can use home equity loan to remodel your home. This is an exciting time. You have hopes and dreams for changing up a space in your home to better fit your needs and your lifestyle. And maybe, depending on what it is, increase the value of your home as well. Maybe it's updating a bathroom with a new vanity, a fancy sink, or a full-scale kitchen remodel where you can gut the space and start over. Whatever your dreams are, home equity loans can help you finance your remodel. I worked with a member who chose to take out a home equity loan to be able to finish, her basement. And she took those funds in increments as she was working on completing that, rather than doing it all at once to pay less interest overall. So think about this for a moment. What home improvement project is on your list? Let's talk about how you can use the home equity loan to consolidate debt. The benefit of using your home equity for a loan consolidation is that it allows you to consolidate multiple payments into one easy monthly payment. We often see members who are struggling with paying the minimum payments on multiple credit cards or loans at once. The cards may have different due dates during the month. Each of them have a different balance, meaning that there's a different minimum payment also. Consolidating credit card debt can be instrumental to a household budget. If you are paying on multiple cards, this is one easy way to get out of paying on high interest rate credit cards, especially if they are retail store cards. We've seen retail store cards in the 20% range. Another option has been helpful when using equity is to really help with paying bills. As mentioned earlier, the peace of mind that comes with having access to funds is life-changing. There are many members affected during the pandemic with the reduction in hours or looking for new employment. The line of credit option can be just the peace of mind that you need to cover a furlough, a layoff, and or an unemployment gap. Another option could be using equity to fund life events. After all this time in your home, you've built up equity, which is an investment. Many members have taken out equity to cover paying for children's college costs, wedding expenses, down payments on other properties, funding a business, caring for family members, or taking that dream vacation. Another great example of providing yourself some security with using equity is when you need money for those unexpected expenses. For example, maybe you have home repairs like your furnace that goes out. Your well no longer works for those of you living in the country, or maybe it's to fix a leaking roof. You may have had some medical expenses where you are responsible for a larger deductible or, a percentage of your copay and have multiple medical bills. You can pay for them in full using the equity, then just have one payment each month. Think about this for a moment. What is one unexpected expense you've recently incurred? How to access a home equity loan. There are several ways that you can access your home equity loan. When the loan is funded, the funds would be placed into your account where you can use the funds at your convenience and the route that works for you. You can transfer the money from your account to pay bills directly, come in for cash, or request a bank check from your account. If there is a loan contingency to pay the company directly, the credit union will take care of dispersing the loan and paying the companies that were selected. How to access your home equity line of credit. There are several ways that you can access your home equity. You can transfer money from the line of credit to your checking account in online banking or your mobile app anytime. This means you can transfer the money while you are standing in line at the home improvement store into your checking account and pay with your debit card. You can also stop into a branch and get a cashier's check or cash. You can also order HELOC checks, so we call them home equity line of credit checks, with us that you can write as you are on the go. Again, if there is a loan contingency to pay a company directly, the credit union will take care of dispersing the loan and paying those companies that were selected as well. So how do you apply? We're happy to connect you with someone who can determine the equity in your home and rates to finance, which you can email us at financialwellness@summitcreditunion.com. You can also apply online. The nice part about being connected with a coach first is that credit is not pulled until you are ready. You can get all of your questions answered before you apply. You will need a few things before you apply for a home equity loan. You will need your most recent mortgage statement, property tax bill, current homeowner's insurance declaration page that is currently with policy dates, 2 recent pay stubs, and 2 recent W-2s. If you are a condo owner, you will need proof of 6 months of condo dues payments and your condo association insurance policy. If you are applying online, these can be uploaded to our secure site as well. Now, the home equity process. Once the application is submitted, the lender will reach out to have you sign early disclosures to move forward with your application. From there, collecting your documents and ordering the type of appraisal needed. Once we have all of the documents, we will send it to underwriting. Once the decision is back and the value method has been received, we will confirm the amount you are requesting and that it falls in line with the home value and the loan to value guidelines. If so, we move forward to scheduling closing. Once you sign, there will be a 3-day right to cancel following. Following the 3 days, the funds will then be dispersed. Let's talk about second homes, as some of you may be unaware that you can pull equity from a second home that you own, and we do consider a second home further than 30 miles of your primary residence. On a second home, there is no 3-day right to cancel. Once documents are signed, since it is not your primary residence, those funds would be available. You would have immediate access when the documents are signed and that loan is dispersed. Many members have gone this route as well, depending on what their overall goals are. If the home is used at an investment property, the process for taking a loan out would then go through our business department rather than the consumer side. So we've covered a lot of information in this short time here on our webinar. You've learned how to leverage equity in your home, how to determine your home's equity, how to access a loan or a line of credit, how to apply, and the overall process. So let me ask you here, what would you use your home equity for? We thank you so much for tuning in to our on-demand webinar. You do have the ability to pause and replay if there were some slides that you needed a little bit more information on. If there are any questions at all, you can certainly send us an email at thatfinancialwellness@summitcreditunion.com or Summit Financial Education at summitcreditunion.com as well. There is a QR code here. These are all of our live events that we do run, and we'd be happy to have you join us. Thank you so much for tuning in. Have a great day and be well.